we're going to be basically finishing up our discussion about Fibonacci's. Last time we did From Bunnies to Wall Street. Today we're going to do it's part 2. It's about time. So you're going to want to watch this all the way through to the end of the video, because at the end of it I'm going to show you some really cool grid type formations you can do with both time Fibonacci's and price Fibonacci's. So let's get going in today's session right now. If this is the first time you've joined us on Active Trend Trading's Market Check Talk, please hit the subscribe button and also the bell to be notified when we do post new. Always paper trade any new method prior to the risk of their own personal capital. Our intent of Active Trend Trading is to clarify something and multiply. Whew. Okay, let's get going. Fibonacci's is a tool. This is a refresher from last week. It's a type of an indicator that does a couple of things. You know, one of the things I ask myself oftentimes when I look at Fibonacci's, do Fibonacci's work because they are, you know, the golden ratio and they, you know, are predictive in some sort of way, or is it basically because the Fibonacci's work because it's a self-fulfilling prophecy? Maybe that's one thing we'll never know for sure. But with Fibonacci's, we want to be taking a look at retracements. Now, this is primarily in price actions, and we covered that in our first session. And I'll leave a link at the end of today's session that will, you know, basically send you back to part 1 of our presentation on Fibonacci's extensions. Extensions are used in both time and price actions to kind of be predictive. Show us where are things going from where they're currently at based on symmetry with things that have happened in the past. Then Fibonacci time zones provide general changes. And again, these are not 100% predictive, but they give us kind of an idea of where do we need to be on guard for some change in the underlying market structure or some reversal. And so from that, they work very, very well. And then finally, there's the time, and then there's also arcs and fans. I don't spend any time looking at arcs and fans simply because I don't need to. I mean, some people really, really love them. I personally think that they, you know, what they add to the chart, and when you're doing your analysis, basically what they add as far as value does not equal what it takes to get the darn thing set up. So let's get going. So types of Fibonacci tools, we talked about that a little bit earlier. Fibonacci's time zone provides general changes. Time ratios, on the other hand, our extensions can highlight symmetry zones when trending prices may hit time resistance. Now that's important to know. We look at a live chart here shortly that's going to be basically taking a look at how predictive was it, both in price action and timing. So here's an example. This is Fibonacci time zones. And as you can see, if you start generate them from back here and project them forward to the right, they give indications. Of course, this is Google back a few years ago. Give indications of where approximately time should become involved. One of the Carolyn Borden, who basically is the Fib Queen, she talks about these time extensions and time zones from the aspect of that if price action doesn't react within 1 to 2 days plus or minus of the projected time zone point, then that voids that point. Then you go to the next one. And so that's one of the things to keep in mind as you're doing your analysis. Secondly, so let's take a look at, here's a good example. Okay, I want to first take a look at and this is a time projection. And let me get my drawing tools up here. So what I'm doing at this point is basically I'm taking this move down projecting it forward in time. That's what this does. This line here projects it forward in time to this high here. And then what that does for me is then it gives me, and then it projects a line forward, as you'll see the 100% extension, to where price could come in, where time could come into impact the price action for a potential reversal. And as we see here, it worked right on the nose. Why does this happen? Well, a lot of times it happens simply because it's a reflection of human nature. It's a reflection of you know, the psychology of the people who are driving a particular stock or ETF or index. And so that's why, you know, we people, we flow in cycles, basically. And so you would anticipate the time cycles on your time chart to reflect something similar. Now, does it work 100% of the time? The answer to that is, does anything in the market work 100% of the time? Do you know, and you could do me a favor and leave that down in the comment section. Does anything work in the market 100% of the time? And the answer to that is, of course not. And so, but what we do when we look at these different settings in the market, what we're doing how to do is just we're trying to define a point in time and price where something may happen. And then we observe what's going on at that place to see, you know, is something really turning around? And that's where you throw on the convergence of clues, like the candlesticks, the price, the moving averages, the trends, and that type of stuff. Are they also supporting the theory or the idea that something's going to reverse? This is pretty good stuff, man, I tell you. So let's take a look. So there's the time projection. Now let's add to that then. So that's symmetry. That's the point in symmetry. Let's add to that using retracements and extensions. And so everyone is watching. Is it magic or just self-fulfilling prophecy? It provides unseen levels of support and resistance. That's one thing that the Fibonacci's, both time and price, Fibonacci's do in fact do. They tend to identify where traders react, should be used with other clues, as we covered. Failure of a level increases the probability that price will react at the next level. They provide us, you know, definable targets and stops. So let's go ahead back to what we were talking about previously. If we project now, we want to use these all together. Well, as you can see, if what you're seeing from your time, and you know that's why one of the ways you'll know it's a time projection or a price protection, is that price projections will go along the timeline. Or correction, the price line over here, the prices. It'll go back and forth, up and down that area. So in this particular case, we're measuring this move on Tesla, this high here, down to this low. That projects up, gives us the 100% retracement, then projections for higher targets from there. Well, was there also potential symmetry with respecting to timing in this particular instance? There's your convergence of clues. And this is also telling us that, you know, from a purely price action perspective, we had price action hitting up against a downtrending line, a downtrending channel, at a moving average. That yellow one is the 50-day moving average, at the 100% extension or retracement off the Fibonacci's. So it was in the TSI down here in the bottom was starting to roll over. And so the convergence of clues from just pure price by itself was screaming at us, this is probably a place where we are going to reverse. Well, how can we strengthen our current projection? Well, add one other thing to it. And what is that? Let's add the perspective of time. Again, this is the projection on a price action. Well, what happens if we add time? There's your price extension. Now let's look at, that's the same spot. But now, as you can see by the orientation of the timing factor, and this is a time extension, And now that we're lined up and lining up and coming off of the bottom here, which is the time aspect, look what also is starting to reflect up. We know that this level right here was a price action based Fibonacci potential pivot point or potential reversal area. And sure enough, what happens? It turned out to be symmetrical with this move up here, was this move up here. Again, now does it happen right on the nose like this all the time? No, it does not. However, we want to be looking either, a couple of days before or a couple of days after. Now, in this particular case, it hit it right on the nose. And this particular price action was saying, do something there. Now, let's say we were long in Tesla. What would we want to do? Would we want to basically jump short and get everything, back into a short? It depends. I mean, we were in a downtrend, but let's say we were long the position. We could say, well, you know what? I'm going to take some of my profits off the table. That's another way of trading this particular, these two indicators together. So what else we have? So time resistance. So we had price resistance, time resistance, and the combination of the both basically were predictive to show when we were going to turn around. And that happened to be right here. And so let's take it forward one more time. Now in this particular mechanism, what I have shown here with Tesla is a couple of things. First, again, our horizontal lines are reflective of price extensions. In this particular case, I measured from this low up to this high, from this low up to this high, back down to this low. That gave us our first price projection heading up, heading up, heading up. And as I've said in the previous video, your 100% extension, your 1272 extension, your 1618, and then finally your 2618 can be upside targets that you're looking at for, potentially moving, for taking profits and or, taking profits, reducing your exposure to risk. And so you can plan it that way, especially when, and what I did in this particular situation is I took also the time projection from, I want to say I took the time projection from here to here to here, and then started projecting that out. And what we were measuring from that is this extension to the upside. We hit the first extension here, and what do we see? What happened here is we had both a price and time area of resistance, and sure enough, things slowed down and stopped. Utilizing the same mechanism, we were looking then at the next grid over, the 1272. Didn't hit there. 1236 didn't hit there. And so we pushed on up from there. A couple of days before we hit the 161 time extension, it hit the 1272 price level and then bounced down from there. This chart also provides a very interesting perspective, is once a strong trend starts to take place, the timing Fibonacci's are less meaningful, and basically they don't quite show the same type of predictive power that they did when you're getting these nice little up-down trends like we had over here. Now, what you can do when we have a situation where we are having a strong trend like that, go to your longer-term charts. Go to your longer-term charts. And so I hope that's beneficial. So let's see what else we got here. Time resistance, target, window. And so that ends part 2. Let's go ahead and take a look at a live example of this. And the live example that I put together, again, is our buddy Apple. Our buddy Apple. I do want to change one thing here. I want to, you can leave it at the one, this is the time extension. You can leave it at the 1, 2, 3, 6, or you can go ahead and extend that out, make it similar to the price action. So I'm going to edit that. I'm going to make that the 1272. 1272s tend to 1.272. There we go. Let's save that as my default. Oh, much better. The reason I say it's much better, it's just that way I've got similarity between my two price actions. So let's first, here's what it's showing. Let's dissect Apple and pull it back in. First of all, I'm going to get rid of I'm going to remove my time. So there we go. And then I'm going to remove my price. There's a lot of little other things you can do in here. Now I've seen some people use Fibonacci's where they line up so many Fibonacci's from all highs and lows and all that kind of stuff that you go blind. It looks like a spider, a spider web, intertangled and all that kind of stuff. A lot of times, if you're just trying to get initial projection out, if you can get, just use some predominant or dominant highs and lows and longer term swings. And so one of the things, okay, when we go and look at, I want to take a look at first, I want to look at the Fibonacci, straight Fibonacci extension, pow. Now I think that was basically just grabbing hold of this. This is a Fibonacci retracement, this high down to this low. All lined up. There we go. As you can see on the fibs, they start moving up. They hit the 382, retreat down. And some of the things, if you're trying to set up a Fibonacci rule-based trading system, is when you go up to a Fibonacci price extension, you hit it, or in this case a retracement, you hit it, you pull back. When you break back through it, that oftentimes can be utilized as a trigger to go ahead and get into a longer term trade. Similar thing here, break through, and pow, away it goes. And so it can, I utilize that plus some movements off of the moving averages, especially the 8 and the 20, plus my TSI. And if you ever want to know about any of that kind of stuff, hey, come on over to Active Trend Trading as a premium member, and you'll get the training on doing that also. So there's one of the projections up. Another projection up that we could have done would basically, as you can see, prices is getting close up to the 100% retracement from the high that we had back here in February this year. What are a couple of other ways we can do that? I'm going to go ahead and rip this out real quick, remove that. A couple of ways you can do this is, what about the move from here to here to here? That is also an excellent, it stands out for us. I want to then go to this is my Fibonacci extension tool. I'm going to go from this low, and I'm working off a daily chart here, to this high, back to this high, there, back to this low. That's when, this is kind of fun because this is where things start getting interesting. Okay. This is the 100% symmetric move from that move from there to there. That's the 100% symmetric move up to that level there. Stopped dead in the water, fell back, came back running up through the 786 and continued to move up. The 1272 was the first place it hit. And then it went on over the 1618. Remember, those are the numbers we've been talking about. 1618 almost hits that. And it comes close, and now it's working its way on up towards the 261. Another kind of unwritten or discussed benefits of learning how to trade with the fibs, because they are somewhat predictive and they give pretty good projections on where prices are likely to go once they start trending is to keep them in mind for upside target for potential profits. Secondly, you can also ask yourself, when you see a price action going up and hitting something like this, you look to your left, you see resistance over here, but you go, why is it hitting there and just stopping? I'll bet you that at some point there is a Fibonacci level defined off one of these past moves that hits right there. I mean, it could be the one from here to here. So I can do, and this is what I talk about, some Fibonacci aficionados. And there you go, right there. See that one? Drop that in there. That was 100% extension of this move. And oftentimes you'll go, well, why in the heck did that just stop out of the middle of nowhere? And that's one of the great ways of kind of going and looking at that. So let's go back. I want to throw on one other item here. Remove. I'm going to stick the original Fibonacci that I had on there, up here. And that was just a pure high-low Fibonacci retracement pattern. And now I'm going to basically go over here and say, let's look at time. And I'll throw in 2 or 3 examples of time. Here is the time, just time series. And I can go here and I can just jump on this one right here. And I can, basically what time series do is, let's see, that's a series from there to there. It really doesn't, it projects out on the ratio of the Fibonacci's as they bounce out. But as I go in here and I take a look at this, what's behind the curtain? As you can see, time series, values, and so it's something that's internally calculated. But as you can see, it comes pretty close on some of these moves of predicting where things are going to be. I don't use the time series that often. I prefer using, because that's an automatic projection. It just, you go to a point in time and you just grab it. And I can go up here. As you can see, it doesn't move whatsoever. Now, if I stretch it back, I do get some projection back out. And so that's something just to keep in mind. You can experiment and play with that a little bit. I start liking the time when it gets into the time ratios. Why is that? Well, I can go back here. Let's go back here to this place right here. Now I can start laying in, okay, if I move, here's my last move up. Well, let's go last move up to last move down, right there. Again, I want to define low, low. How much time did it take me to get from the low here to the low here for the move up? As you can see, there's 100% move on that to right here. Well, look what happens. I get a line in the sand that says that zone right here could be an area where prices will slow going up. And sure enough, that's exactly what takes place. Slows, pulls back down, and then pops back up and continues running from there. So let me add one other thing to this, folks. Oh, you rascal. Okay. I need to add a curve. Let's go ahead and just add that one in there. There we go. Yeah, I like to get that 1272 in there because that, as you can see, 1272. It pulled back into the 1272. And again, let me highlight and bring this up as much as possible. As you can see, that 1272 here also related to a 50%, pull back to the 50% line before rocket shipping up. And so again, it's I don't want to spend all of my time doing this kind of analysis. However, if I can throw them in when appropriate, that's what I do. And so oftentimes I will spend my time just on the price action Fibonacci's and then forego the time frame unless unless it appears as if I might be approaching a time level of resistance and or support. Works for support also. So last but not least, I'll show you this last one, and this is the Fibonacci time extension. So let's see. The way it works is basically if I come from here, if I go from here, high low or low high. Well, let's go over here. Let's go low to either that high or that high. Project on down to the low, which is here. And as you can see, as this starts to project out, it gives really excellent or good opportunities to see this is to my next low. Here's a low right here also, where price action came back and pulled back. Again, highlight it in that I've got a bunch of stuff coming together right there. Just start counting the convergence of clues. I have one, the 20-day moving average. I have two, the 50% retracement. I have the time, right there also in play. Do one more thing here, guys. It's there. Okay, cool. See what else we've got going on here. Yeah, that's fine. And so then I can project out from there. Now I can also now that I'm starting, and so as you can see, I can also project out. Do I want to project out any more than that? I don't think so. I mean, I can go out to the 4%, but that's fine. And so as you can see, it provided when it reached its high over here, it provided points where we can anticipate things moving back towards downside. Now again, just like candlesticks provide us places where we can anticipate and expect reversals. However, it doesn't tell us how far. Same thing, we have to analyze both the trend, where things are at with relation to the moving averages. And so I want to throw one more extension on here. Again, I go low, low, I go high, I go back to the next major low or swing low, and again, here's the 200% projection of this move here is actually out here. If I'm not mistaken, it's 1, 2, 3, 4, 5, 6, 7. And we had 1, 2, 3, 4, 5, 6, 7. And then isn't it interesting that that next 200% extension is, we had a little bit of a reversal here, but within a day, it was giving us a prediction of prices may be running out of gas. And again, it gets back to that situation, just like the waves in the ocean and the energy provided by them. You have ebbs and you have flows, and ebbs and flows. So, hey, if you have some additional questions about Fibonacci's or anything, please leave a comment and a question down in the comment boxes. One of the things that is very, very specific, because that brings us to a conclusion today, one of the things that's very, very important for people who are wanting to learn how to trade is, one, you must be decisive. Learn to be decisive. One of the ways you can start being decisive is, when you get some good training like this, go ahead and notate it and leave a comment or leave a thumbs up and take action. Learning to be decisive means you learn how to take action. And I'll be straight with you. If you can't take action to give a thumbs up or leave a comment, then you're not quite ready to get on with the bigger things of growing wealth by trading. I'll just be straight with you. So anyway, hey, thanks for joining today. What else we got? Let's see. Hey, well, that's it. And from my home to yours, aloha, trade well, prosper, be free, stay safe. Again, remember, subscribe, hit the bell for get notification of new content, and last but not least, hit a like or even a dislike if you say, Dennis, you pissed me off because you said those bad things and you said I'm never going to be a bad trader or a good trader, blah, 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 because I can't make a decision. Anyway, if that upsets you, that's fine. Leave a comment. Tell me how much that upsets you also. And lastly, I will leave the link right here for the session from last week. And for those who don't know me, most of what I was just saying, I was kidding around. Because I do that. I love to poke the bear. I just do. Anyway, aloha. God bless everybody.